So I've had a lot of people ask me here lately, is now a good time to buy a home or should I wait? And of course, interest rates are a hot button topic right now because they've obviously gone up a lot. So really we just want to go through a few things in here and give you a better understanding of the rates are obviously really important. So if you're thinking about buying here in the next year or two, really listen and take a few minutes to go through this because rates, although rates are important, they're certainly not everything in this market. And they have gone up, and I doubt that they're ever going to come back down to where they were, but at some point they are going to come down. In the meantime, I'm going to give you a quick example of what I'm talking about here that I hope will save you some time, some money, some hassle in the future if you're thinking about buying it all. So first things, obviously the rates are higher than they've been in some time, but they're going to come down at some point. And at that point, whenever they do come down, in fact, I was just showing a house yesterday too, and they're like, look, this is exactly what we're looking for. Want to buy right now, and when the rates come down, then we're in even better shape. And I couldn't agree more. One of the things I want you to think about too is when rates do come down, there is a ton of pent-up demand. We usually run 20, 30 different people that are in various stages of buying, and we're over double that. We're over 50 that are looking right now. So there is a ton of demand out there. And maybe you're one of them that's thinking, my gosh, I need a bigger house for my family, or we need to move somewhere else, or whatever the case may be that you might want to move. As rates come down, then that demand is obviously going to go up. And I really think what we're going to have, and what I would like caution you about, or at least warning you about, right now is a time where there's not a lot of demand. Inventory is down a little bit too, but the demand is still there, but not a lot of people out looking, I guess that's what I should say. And so the competition is not there versus, especially those of you that bought a house during the pandemic, during COVID, there was so much demand and so much desire out there that we ran into multiple offers, appraisal gaps to cover if the offer price was less than the purchase price, sometimes limiting inspections, and then of course the need sometimes to pay more than list price. So what I want to do is have you think about this too, is building the equity in your home right now as well. So buying now where values and these prices are not too bad before they go up is also a good idea because again, you're going to build that equity now instead of waiting till later on top of the demand and having a lot more competition when rates do come down. As rates come down, I want you to realize that it's all supply and demand. Excuse me. So as the rates start to come down, the prices are going to necessarily go up. And we're probably going to get back into the bidding wars like we had before. So what I want to do is share my screen here in just a sec and just give you a quick example of what I'm talking about so it makes a little bit more sense for you. So in this example here, I made it really, really simple, but we're looking at let's say a $300,000 purchase. We're putting 5% down on this on a 30-year deal. So the very top one you can see there is at 7.5%. So if you finance $300,000, you bought a house at $300,000, 7.5%, you can see your payments just under $2,100 a month. That's principal, taxes, insurance, and so that's about where it's going to be then. So assume that, and we hear a lot of people saying different guesses, nobody really knows, but when home values do start to go up, they're thinking anywhere from 5, 10, maybe even 15%, and that's what we saw during COVID when demand was high. So in this case, I just went from the second example there, assuming a year from now that rates have gone down 1%. So the only difference between top and bottom is going from 7.5%, say in this case, to 6.5%, but the purchase price is going to be $325,000. That's about an 8% increase in that time frame. So what the whole point with this simple example I want to make for you is that at $300,000 at 7.5% versus $325,000 when rates went down to 6.5% in this example, there's only $54 difference. So your monthly payment is really not going to be that much different. But the problem is, or part of that is going to be too, is that instead of financing $300,000, you're financing $325,000, and then facing some of the other issues that we were just talking about, the competition, the multiple offers, maybe restricting your inspection response, and those kinds of things, and things that you had to do to get a property at that time. So all that said, I think that if this is a good time for you, finances and things are looking good for you, I really think you should consider buying a home in the near future before rates go down and prices go up. I think you're just going to save yourself a lot of time and hassle, and we're out showing houses all the time. I've got some this afternoon, yesterday. We got another one under contract this week. There's plenty of people just like you that are taking advantage of this. Even though rates are high right now, I think it's a golden opportunity for you to get out there, hassle-free, save yourself some money. Take your time looking at properties and find exactly what you're looking for. So as always, whatever I can do to help you out, walk you through the situation, see if it makes sense for you. That's what I'm here for. Let me know what I can do for you, and we'll see you on the next one.